Hey traders and investors, it's Serge Berger here. Today I want to have a look at Yahoo, okay? I'm going to give you the longer term perspective here in just a second, but just have a look at this, okay? So you have a stock here that has really started to lose momentum in the latter part of 2012, coming into 2013. And if we zoom in even closer, you can see we started breaking down below a line of resistance here. If you look at the candlesticks, you can see there were some indecision days, just a lot of shady action that ultimately led through a break below the 50-day moving average last week, and then of course yesterday on January 29th, after the earnings report from Tuesday, sliced also below its 100-day moving average, or rising 100-day moving average here. That's this blue line. Okay, so now if you zoom out just a little bit more, you can see that the stock basically is just much extended above its uptrend. Okay, dating back to late 2012. So this uptrend now, very simply put, now has to moderate. Okay, it's what you call in this business referred to as mean reversion. Mean reversion is not only a normal thing to happen in the markets, it's also extremely healthy. Okay, especially for a stock like Yahoo, where there's so much news around all the time, so many moving parts of the business, so many changing parts of the business all the time with social media and all the other things the company's involved in. So a stock like this needs to reset. Okay, and it needs to reset at least through the lens of a multi-week sort of resting period. So from that point of view, the stock now really needs to get back towards this $31, maybe $32 area at the time, which coincides its 2012 uptrend, this black line, as well as its rising 200 moving average. Okay, mean reversion is extremely important. If the stock somehow finds support right here around $34, $35 and ends up busting higher, so be it. Right now, though, the risk reward on the long side is actually very weak. So through the lens of a sort of a multi-week time frame, the stock here would be very well off getting down to that $32 area. Again, this is a rising support level, so maybe at some point this will be closer to $32, $50, $33, but back down to this attraction spot would be a very good area to go to. Important to understand, if we zoom out a little bit more on this chart, is that Yahoo just a few weeks ago found major resistance at the 2006 highs, okay, near the 2006 highs, I should say. It was a couple dollars short of that. But that's a huge resistance area, which I do suspect will be overcome at some point over the next months. Maybe it's going to take a year. I have no idea. That's not my point here right now. But a level like this is not going to go without a fight. A level like this is going to take some time backing and filling underneath it before the stock can then bust back above it. So that's my look at Yahoo for today. I hope this makes sense. Have a great trading day and take care.